There are various types of real estate and they fall into a number of different categories. There's office, there's institutional, there's warehouse space, and then there's multifamily, there's commercial. And oftentimes when you're speaking about real estate, most times we just group them into two different categories. Welcome to the Property Power Play. I'm Kito J. Johnson, your host, and right here we equip you with the tools necessary to play the game of real estate and win. I'm excited about today's conversation and I'm excited about my guest, Mr. Rodderick Jones. We're going to talk about building a passive multifamily portfolio. Rodderick, thank you so much for being here, brother.
Yeah, I appreciate you for having me here. I'm excited to be here, man.
Absolutely. The pleasure is mine. So tell me, let's talk a little bit about who you are. Just tell the audience who Rodderick is.
Perfect. So, Rodderick is a multifamily capital advisor who specializes in providing debt and equity to multifamily investors who want to buy multifamily properties. Okay. And we do it nationwide, but we primarily focus on the Southeast.
Okay. Tell me about your backstory. Like, what brought you to this point? What have you done prior to now? Have you always been in real estate and in the multifamily space?
How far you want me to go back?
As far as you
Okay, so I got started in real estate in 2016. Okay. I came to Atlanta. I had a bike, I had a hope, and I had a dream. And so I came here and I showed up to Haves and Wants in Sandy Springs. Yeah. And I was like, my name is Rodderick.
Tell the people what Haves and Wants is.
Okay, so Haves and Wants is a meeting that happens every week where you go to that meeting and you stand up and say what you have, and then other people stand up and say what they want. Right. And then if you have what other people want, you can make deals happen. But if you don't have what they want, then you can go out and find it and come back next week and tell them you have what they want.
And this is pretty common in real estate. Like around the country, various investor groups have Haves and Wants meetings where you can toss deals around and share and that kind of thing.
Yes, correct. That's it. And when I came in there, I didn't even know nothing. I was just like, I want to do this. And they were like, everybody laughed, but they were like, you're in the right space. And so from that day forward, I was a wholesaler. And I was just beating the pavement, figuring it out. Realized that wholesaling was very hard. I made some money. I want to do long-term rentals. So then I started wanting to be a buy and hold person. Yeah. And then I shifted and said, buy and hold, that's a long time. I got to get 100 single family rentals all in one place. I mean, all over the city. That's going to be a problem. So I said, I found out about multifamily, listened to the podcast, found multifamily, then realized I can get 100 units in one place and I only got to drive to one building. That's what I want to do. And so from there, scaled up into multifamily, got into business, started looking for deals, got, a fancy got a fancy name, got a fancy team, and we went out and started looking for deals. First deal was a 432 unit in Atlanta. A lot of stuff was great and a lot of stuff went wrong, and then realized that I liked the capital aspect of it out of everything. So out of all the multifamily, out of everything that I did, I liked the way money worked. And I've always liked the way money worked. It's just that people told me I couldn't love money. And so I love finance and I love the way finance work, how you can break down a dollar, put it back together and all of that. So then I shifted over into the capital aspect side of it, and I've been running ever since.
Yeah, that's amazing. It's like for me, you're my go-to multifamily guy. Got a deal that comes across my desk, let me call Rodderick. Yeah. Right? But I like to hear people's backstory because I had no idea you started as a wholesaler. Mm-hmm. Yeah. The thing about real estate investing is it doesn't matter. Like, just get in the game, right? So whatever makes sense at the time, jump in the game. And doesn't mean just because you start there that you have to finish there, right? So that I find that inspiring from what you shared with us.
Yeah, I appreciate that. And one thing I want to say is when I was wholesaling and I got into real estate, I was like, it got to be something bigger. I want to do big deals. I want like buildings and skyscrapers. I like big money. So even when I was wholesaling deals, I was wholesaling deals with bigger price tickets because I like bigger checks. And so now where I'm at now is cool, but I'm still looking for how can I do big? I want to do something big. And so
yeah. So let's talk about alternative investing. Like how do we define alternative investing?
That's a good question. So when you think about alternative investing, I want you to think about everything that is not stocks and bonds. Mm-hmm. So we're talking about real estate. We're talking about gold. We're talking about businesses, private businesses. We're talking about anything that you can possibly invest in that is not stocks and bonds. So if it's not on the New York Stock Exchange, if it's not a bond that's publicly listed, that is considered alternative investing.
Okay. And how does that fit into multifamily?
Yeah, so multifamily is a subsector of alternative investing. So when you have real estate, you have single family real estate, you have short-term rentals, you have long-term rentals, you have multifamily properties, you have self-storage. It all breaks down, and multifamily is just a subsector within the alternative asset class of real estate.
Okay. And let's go a little bit deeper. When we talk about real estate, right, let's talk about the differences between what is defined as residential versus commercial. Is there such thing as commercial residential? Like, let's break it down. Residential versus commercial real estate.
Okay, you're going deep here. Okay, so there is a such thing as commercial residential, but you never get into it until you're talking about deals that's like 100 million or more.
Okay.
So when we're talking about multifamily specifically, anything that is under 4 units is considered residential multifamily.
Okay.
Anything that is above 5 units is considered commercial multifamily.
Okay.
And so when you said commercial residential, that's where the commercial residential multifamily will come into play, the 5 units and above.
Got it. Okay, that makes sense. So now, so today, like in this episode, we're gonna focus on multifamily, right? So just for sake of the conversation, we're talking about 5 or more units. We're not talking about a single family, a duplex, a triplex, or a quadruplex. We're talking about 5 or more units. So whether it's an apartment, a 5-unit apartment building, or a 500-unit apartment building, we're talking about multifamily real estate. Okay? Yeah. So can I invest? Like there's this attitude around investing in multifamily and it not being any work involved. Like, what does that look like? Can you invest in multifamily real estate and not do any work?
That is possible, but it depends on what side of the table you're on.
Yes, let's talk about the table.
So in this table, we have 2 partners. You have what is called the general partner, and you have what is called the limited partner. In the industry, they're called GPs and LPs. And so when you think of general partners, I want you to think of the GP or the general partner as the person who's going to do all the work every single day. And I want you to think of an LP, which is the limited partner, as the person who's just going to hand the general partner the check and say, you go do the work and just make sure I get paid. Yeah. So an LP is just an investor, and a general partner is the person who runs the deals and makes sure that the LPs get paid. So when you say, is it possible to invest in real estate without doing any work? Yes. If you want to do that, then you'll be an LP investor, also known as a limited partner. You'll just invest money to the sponsorship team or the general partner, have them do all the work, and they just give you money back.
Yep. So it sounds like the role of an LP or limited partner is best suited for somebody who wants to park their money in real estate. They want to continue doing whatever they're passionate about in whatever industry they're involved in, but they have this cash that they want to grow in real estate. Would that be a correct statement?
Yes, that is correct. So it's like when you invest in not alternatives, so when you invest in the stocks and bonds and you go and sit with your financial advisor, whoever's going to manage your portfolio, you tell them, here's my money, here's my 401k or here's my IRA, here's what I want to invest in, and then they take the money and grow it. And so when you're a limited partner, you do the same thing. You find a general partnership team and you say, you invest in multifamily, I want to invest in multifamily. Here's my money, take my money and grow it. And that's what you do.
Got you. You said find a general partnership team. Tell me what that looks like. How do I find a general partnership team?
Yeah, so these days now on social media, you can just Google multifamily investing and you'll see all of these people pop up for multifamily investing. If you go on Instagram, you type in multifamily, you'll see everybody making content around it. So what you do is you figure out, you go on social media, you look at their profiles, you say, which one of these people do I like the most? Who do I feel like I trust the most? And then from there, you go to their website and you look at them and you say, okay, this is the general partnership team. I feel like I like them. I feel like I trust them. Now you see what they've done. What type of deals do they invest in? Do they invest in long-term deals? Or are they short-term minded? And then go from there. But before you even do that, you got to figure out what kind of investor you are. Because if you don't align with the general partner, it's going to be a problem from day one. But if you say, I'm a long-term investor and I'm looking for long-term general partners, it's a good match. But if you're a long-term investor and you find a short-term general partner, it's not a good match. So the first step is to figure out who you are, what type of investor you are, and how long you want to be invested. And then from there, you let that be your criteria for who you find.
There are various types of real estate, and they fall into a number of different categories. There's office, there's institutional, there's warehouse space, and then there's multifamily, there's commercial. And oftentimes when you're speaking about real estate, most times we just group them into two different categories, right? Commercial is everything other than what you live in, right? And then there is residential, units that are constructed for individuals to live in. But I want to talk a little bit about the distinction, the real live distinction between residential. From a financing perspective, when you're going to finance residential real estate, is everything 4 units or less is considered residential. 5 units or more is considered commercial residential real estate. And that's really when we jump into true multifamily investing. Multifamily unit is a unit that's 5 units or more. So it could be 5 units, it could be a 20-unit apartment building, it could be a 1,000-unit apartment building. But the greatest distinction there is, from a financing perspective, 4 units or less is still considered residential, 5 units or more considered multifamily commercial real estate. Let's define, or just give me some parameter around long-term versus short-term. Like you said, if you're a long-term investor, look for a long-term general partner, and vice versa, short-term. What does that mean?
Yeah, so I define long-term, medium-term, and short-term. So short-term is anywhere, they're going to be in a deal anywhere from 6 months to 3 years. Medium-term, 3 years to 7 years. Long-term, 7 years and up.
Right. So we're now speaking to my investment and how long it's going to be before I see a return. Is that right? Like if I'm investing as an LP, $50,000 in this development or in this project. To say that I'm short term, that means I should not expect to see a real return for 3 years, right? Is that what you're saying?
Kind of. Okay. So it's a yes and a no.
Okay.
So some deals pay out what you call a preferred return, meaning that you can earn money.
You're getting deep on us, right?
Oh, I'm sorry.
No, go ahead. No, you're good. Go ahead.
Meaning that you can earn money while your money is invested.
Yeah.
So if let's say you're in a short-term deal for 3 years, and they pay out a preferred return. I give you $100,000, you pay me my preferred return, and then on the back end, you split profits. This is called the promote. This is where you split the shares of the profits. So when we say a return, that promote is where you're going to get the biggest chunk of your money when it's time to split the profits, when they sell the deal. But while you hold the deal, they could earn, give you some preferred return or some type of return while you're holding it for those 3 years. So then you'll make money while you hold it, while it's invested, and then you make your biggest money on the back end. Now, let's say a sponsor don't offer preferred return. Then you'll invest your money and you'll get the profit split on the back end and nothing in the middle.
Got it. You threw out another term. You said sponsor, right? So how does the term sponsor fit into the conversation of a GP, general partner? Is it one and the same? What do you mean we say sponsor versus general partner?
Yeah, so that's a good question. So sponsor and GP is the same thing. You'll hear them interchanged. Sponsors is the general partnership team, and the general partnership team is the sponsors.
Okay. How do I, and you addressed it a little, but I want to go back to this. How do I choose or evaluate? So, how do I evaluate a GP or a sponsor? So I found someone or maybe several people that are midterm investors, and that's where that aligns with what my goals are, right? I'm willing to put money in and see a real return 5 years from now. I'm a midterm investor, and I found a sponsor with those types of opportunities, or multiple sponsors. How do I choose the sponsor? Like, what am I looking for in a sponsor?
Yeah, so perfect. So first thing you're looking for is a track record. So you're looking for a sponsorship team that has a track record. And you look, they've done this before, they've done these deals, or they've recruited a competent team that can execute on these deals. So if you just find a sponsor and they're like, I've never done this, here's what I want to do, hope for the best. Yeah. That's one way of looking at it. Yeah. Or you can find another sponsor that says, here's what I want to do, here's the team that I've built out, and here's how we're going to execute. That is the sponsorship team that you're looking for. After that, the next thing you're looking for is making sure that they identify with your investment philosophy. So you're a medium-term investor, the sponsorship team invests in medium-term assets. Lastly, what you're looking for is honesty. Is the sponsor honest? Is the sponsor transparent? Is the sponsor proactive? So, and the reason you're looking for this is because if something goes wrong, you want a sponsor that comes and tells you bad news and also tells you good news, because your money is invested with these people. And so you always do the pocketbook check or the wallet check. Would I feel comfortable leaving my wallet with this person? And if the answer is no, then you don't invest. If the answer is yes, then you go ahead and invest.
Yeah, that's great stuff. That's great advice. Is it possible with this strategy to get to a place where I replace my income, maybe from my W-2 job or whatever I'm doing? Is it possible as an LP investor to get to a point where I replace my income and live off passive income as an LP investor?
Yes, that is possible. And I'm going to try not to go too far into the weeds with this one.
Okay.
But it's all based on percentages. So if you're an LP investor, and let's say your active income is $100,000 a year, that's how much you make. Or let's say it's $200,000, whatever it is. You say, how much money do I need to invest in order to hit a passive return of $200,000 a year? So how many deals do I need to invest in order to generate $200,000 in passive income? And so this could be, maybe I need to put $2 million into a deal and generate a return of 6%, and that will give me $100,000 or $200,000 to live off of. If I can do that, then I can live off the income. Or maybe I just keep investing into deals until my expenses and my passive income meets, and then I'm good to go. So you invest in the deals, you figure out how much money you need to earn passively in order to support your lifestyle, and then you invest into deals that pay you passive income, meaning they're going to pay you a preferred return. If they can pay you a preferred return while they hold the property, you're going to take that money and live off of it while you wait for the bigger check to come.
Got it. So what are some of the challenges? Like what are the biggest challenges as a passive investor or a LP? What do I look out for?
So you look out for people that move fast. So you look out for, everybody can talk a good game. Everybody can tell you what they can do and all of that. You want people to show you what they can do. If a sponsor is rushing you or making you feel any type of way about asking questions, that's your number one red flag. Because one, you're investing a lot of money with these guys or these ladies. This money that you're invested is your hard-earned money. So they should answer every question you have. And if they can't, then you don't need to do business with them. Secondly, ask them to show you what's the process. What do they go through to evaluate a deal? How did they come up with these numbers? Who's on the team that can make sure that we hit these numbers? And it may seem like you're doing a lot. So when you're talking to sponsors and you're feeling like I don't know what I'm talking about, it may seem like you're asking a lot of questions and you're being a pest. But you're just trying to get clarification to make sure that you're investing with the right person. Because the last thing you want to do is give your hard-earned $100,000 to somebody and they take it and don't grow it. Or they take it and throw it in the trash or do it and you're funding their lifestyle and you're not getting a return on your investment. So to wrap it all up, to sum it all up, the one thing you want to do is, one, make sure that the sponsor is not rushing you. Make sure they're honest, open, and transparent. Make sure that they can show you their process and what they're going to do with your money, and make sure they have solid team members that can back up what they're saying. If they're open, honest, and transparent, if they have a solid process, and if they can show you the team members, then they're good to go. If you feel any type of way about investing with the sponsor, you just got to do the gut check. If you feel any type of way, don't do it. And if they can back it up, then go forward with it.
Where are we in this market? Real estate's always changing, right? We're always evolving. Where do you see us in this current market as it relates to deal flow and true opportunity?
So deal flow is at a halt right now. And the reason deal flow is at a halt is because buyers and sellers can't come to terms what they need to do. Sellers are still selling off of yesterday's prices, and buyers already see where the market is and they want to buy for today's prices. And so right now there's still a lag in what sellers want and what buyers want to pay. Once that drops and they meet in the middle, then transactions will start happening again. And transactions are going to start happening soon because some buyers have loans coming due and some buyers most all buyers have loans coming due. So when they have those loans coming due, somebody has to buy it. And so that's when transactions will start happening now. Yeah. And so right now, Fed's increasing interest rates. Everything seems like it's going haywire, but it's really not. When the cost of capital becomes more, deal prices go down. When the cost of capital is cheaper, deal prices go up. So we're just right on track. Yep. Everything is going how it's supposed to go. Yep. Some people are going to get hurt. Some people are going to see it as an opportunity, and they're going to make a lot of money. Yeah. But right now, the market is in transition. Yeah. We're transitioning into, I don't want to say a downturn or something horrible, but we're transitioning into a correction where prices are becoming more normal and people are going to be able to scoop up multifamily deals at a fair price compared to inflated prices.
I'm glad you said that because I think in a lot of ways, you make my job a little bit easier, right? Because people can call all the time. I need a deal. Kito, why ain't family deal yet, right? Yeah. And it's because we paused to make sure that what we bring to the table is a deal that makes sense, not just for where we are now, but for the long haul. So I think you brought some real clarity around the whole process of patience that's involved in investing and not just running after something because you got cash you need to park real quick.
Yeah, and that's a problem, you know? So when you said, how do you identify sponsors that you want to invest in? Yeah. Your sponsor also has to be patient. Yeah. And they got to let you know if there's no opportunities, I'm not going to invest the money. You know, some sponsors invest the money because they need to earn fees. Right. But the best part is if I don't have to place it, I won't place it because there's no opportunities. I don't see any opportunities on the market. And then when opportunities become available, we're going to place it and we're going to make a lot of money. But for now, I'd rather not place it and make sure that we have the capital to sustain and make sure when the opportunity comes available, we can take advantage of it. Yeah. So patience is a big one.
You know, I want to kind of wrap up with this. You mentioned while you were talking earlier about passing the gut check. Mm-hmm. And you know, I've done a lot of different types of deals over my career. And everything that I've ever done that served me well, passed the gut check, I felt good about it, even when perhaps people around me may have felt that's not the best thing to do, but my gut said, let's move forward, and it's always served me well. I just want to say this about you, Rodderick. From the very first time we had our very first call, you passed the gut check, brother. Like, it's something about you and your spirit and your energy that causes me to want to be around you, that want to cause me to want to work with you and to grow in business with you. And I thank you so much for being a part of today's conversation, and I look forward to doing so much more in the future.
So I appreciate you for allowing me to be here, and I thank you for giving me a chance to even pass the gut check and to show what I can really do. So I appreciate it.
Absolutely, thank you. You have been watching the Property Power Play. My name is Kito J. Johnson. I'm your host for these conversations, and it is right here that we empower you with the tools necessary to play the game of real estate and to win. We'll see you in the next episode.
The Convo, the two-time 2023 Telly Award-winning network and your home for conversations around Black wealth, available on all platforms.